On that note, let's get in Venkatesh Balasubramaniam. He is the MD and co-head of research at JM Financial Institution, who joins us on the show. In fact, the JM Financial's research team has put out a note which talks about a handful of names that they are very positive on. So on that note, let me welcome Venkatesh in. Venkatesh, good afternoon and thanks for taking the time out. Firstly, if you can talk to us about the theme of this particular note, this specific note. What are the factors that you're considering here, and what are the things that could perhaps play in favor of all the stocks that you have mentioned here?
Okay, so as we go towards the new year, we've been getting a lot of investor queries, both from domestic funds and from FIIs, that what would be the top 10 to 15 picks that we would have for the next year. Now, obviously, the market trading at almost 21 times 1 year forward is not cheap. We would have been more comfortable, and there would have been more margin of safety if the market was something like 20% cheaper. Now, it is not easy to find stocks which have reasonable growth and also have reasonable valuations in this market. So this was an exercise in itself. So what we did was we asked our various analyst teams to suggest what are the top picks in each of these sectors. So they came up with almost like 50 plus ideas. Then what we did was we overlaid valuations on top of it. It needs to be at reasonable valuations. Ideally, we would prefer if the stock is trading closer to the historical mean, at least mean over the last 5 years. And it would be maximum we would possibly stretch would be 1 standard deviations about the mean. So that was our thought process. Further beyond that, we also looked at how numbers will pan out over the next 6 to 9 months. Because once you suggest a stock and then there are earnings disappointments, that doesn't go down very well with investors. So we were very careful in terms of looking at numbers bottoms up. This is not something which normally strategists do, but we have done this exercise bottoms up. So based on that, we drew up a list of around 12 stocks. In that, out of those 12 stocks, 4 stocks are in the large cap category, namely what we have is Maruti and Axis Bank. You have Havells, which is also in the large cap category, and you have Samvardhana Motherson.
Right.
We have 4 stocks which are in the mid cap space and four stocks which are in the small cap space.
Right.
So what is interesting about most of these companies is the fact that near term, over the next year or so, numbers look good and valuations are also very reasonable.
Right. Venkatesh, Mahima also joining in. Out of all the names, one name that really stood out for me was Z Entertainment. And you've given a target price of 200, which implies a 40% upside for the stock. I just want to understand the thought process behind, selecting this from a basket of 50 that you had shortlisted. How does this make it to top 12?
Okay, look at Z. After the Sony merger was called off, the stock has literally collapsed. When we look at most of these, when we look at the valuation, it's almost at bombed out valuations. The company is guiding for something like 10% kind of top line growth and a significant improvement in EBITDA margins from 10% all the way till 18% kind of margins. Those number improvements have already started playing out, but because of past incidences which have happened in the company, a lot of people are totally ignoring that company. A formidable media company at bombed out valuations, very hard to ignore. So that is the thought process, that it is extremely cheap, too cheap to ignore. And that is how we have this. Numbers have already started coming through. The first and second quarter numbers have been extremely good. If you look at it on a YOY basis, we expect this to continue. And we are in our numbers. In fact, we have not factored in the full management guidance. Management is talking about almost 10% kind of top line growth. What we have is maybe around 5 to 6% top line growth over the next couple of years. And of course, but we have margins improving. So we think Z is extremely interesting as a value pick.
Right. Venkatesh, it's interesting that you also mentioned Axis Bank, because what we're actually getting off late is more and more interest from the street in this specific bank, especially when you consider something like an ICICI Bank or an HDFC Bank, some of the relatively larger peers. Why is it that you picked this one up?
So if you look at Axis Bank, again, trading below mean, it is not even above mean, it is trading below the last 5-year historical mean. The core bank is trading at 1.6 times price to book, which is at almost like a 30% discount to ICICI Bank. They have enough credit provisions. So credit costs, which is almost like 1.2% of loans. So credit costs will start coming off in the second half. Their deposit growth has been almost 14%. Loan growth has been close to double digits at around 11 to 12%. We are expecting 12 to 13% kind of EPS growth. We are expecting 16% ROE. Valuations cannot go down any further. So there is enough and more valuation cushion. There is margin of safety, and that is why we like Axis Bank. And last but not the least, the fact that Mr. Amitabh Chaudhary's MD and CEO extension has happened for the next 3 years. That gives leadership continuity, which we think is a significant positive.
Right. Venkatesh, even Havells makes it to your list with a target price of 2031. While other brokerages after the Q2 results maintained a neutral or whole stance, you're pretty bullish on this counter. And I want to know as to, why is that, and what are the reasons as to why Havells makes it to the list?
Okay. So when you look at Havells, you need to break the business down into 3 parts. One part is the FMEG part of the business, which has been doing quite well over the last 4 to 5 quarters. The second part is the cables and wires part of the business. And the third part is the Lloyd's business, which is basically the AC business. Interestingly, today, I think Havells is at around 13-14% market share in the AC business. It has reached a level where it can be profitable in the AC business. So after having considerable losses in the AC business for the last 4 to 5 years, that business is turning around. We believe that in financial year 26, it is going to be profitable. And from there, margins will only improve as the scale of the business will grow. So we are expecting Lloyd business to grow at almost 15 to 16%, which is more or less in line with the industry growth, and margins improving. The second bit of the part is people will be surprised that the cables, wires and cables part of the business contributes a significant part of the EBIT. What was happening there? Historically, Havells was concentrating on the B2C part of the business, which basically means that the wires part of the business. And because of that, last 4-5 years, they have completely missed the cable upcycle. They have corrected that mistake, and recently they have commissioned a new facility in Tumkur, which has significant amount of land where more capacity can be added. So what we will observe is Havells in its cables part of the business will also start growing in line with some of the market leaders. So we believe that numbers will look good. In this recent correction, stock had also come off from all the way till from close to 2000 levels to 1600, 1700 levels. Last 1 to 2 years, the stock was trading more than 1 standard deviation above the mean. Now it is closer to the mean. So it looks very, very interesting. There are quite a few other names there in the consumer durable space. Voltas, Blue Star, all these things are good. But even Voltas, Blue Star, which used to trade at a significant discount to Havells, their valuations have re-rated all the way till to the levels of Havells. And at similar valuations, we would always have a preference for somebody like Havells, which is more diversified.
And Venkatesh, you have a significant upside on a large cap like Maruti Suzuki as well. Why is that?
Yeah. See, again, if you pull out the charts of Maruti Suzuki, what you will observe is the stock is trading below 1 standard deviation below the mean. Now, obviously, there has been a slowdown in four-wheelers. And even if you see the September, October and November months, which are usually the festival season, the company which has actually done much better than Maruti is Mahindra and Mahindra. Maruti, whereas Mahindra has grown at double digits, its volumes. Maruti volume growth has been 2%. I think Tata Motors volumes have come off. The industry has not done that well. But what our auto analysts say is that inventories have started correcting. So it might not have a great third quarter. It will have an okayish fourth quarter, but this is well known in the industry. The fact that third quarter and fourth quarter will be weak is extremely well known, and it is already discounted in the price. That is why the stock is so cheap. Now, in 1 month time, you have the Auto Expo. Now, in the Auto Expo is when Maruti is going to unveil a lot of very exciting hybrid cars. Which will kind of set the tone for the next year. So we believe this is a very good time. A fantastic franchise like Maruti at the kind of trading 1 standard deviations below mean. This is the time to buy, and that is why we have that big upside on the stock, because we are looking beyond the next 6 months of weak results and pushing this stock.
Venkatesh, thank you so much for giving us those insights. It's a very interesting mixed basket of 12 stocks, viewers. Just to name them, from the banking space, there's Axis Bank and Nippon Asset Management Company. So this is a basket of banking and financial services. From auto and auto components, Maruti Suzuki and Samvardhana Motherson make it to the list. Infra space has Ahluwalia Contracts. In the IT space, there's KPIT Tech. Media has Z Entertainment. From the consumer durable and electronic manufacturing space, there's Havells and Cyient DLM. Hospitals and diagnostics has Metropolis and Global Health. And lastly, power equipment has BHEL in the list that we have. So Agam, these are the 12 stocks that JM Financial, that are the top buys for 2025 as per JM
yes,
Financial.
and there's certainly a very interesting mix, as you pointed out, and a significant upside as well for a lot of these names.